Hello and welcome to Venture Best Spotlight, a podcast presented by Venture Best, the venture capital and emerging companies practice group here at Michael Best and Friedrich. We're your hosts, Evan Lonergan and Mbiyimoh Ghogomu.
On this podcast, we will be featuring some of our amazing founder clients and network of venture capital managers, each of whom is inspiring instrumental change to the way the venture economy produces, invests, does business, and even defines a startup. Hi, everyone. Welcome back to the Venture Best Spotlight, the podcast series presented by Venture Best. Today's podcast is hosted by me, Mbiyimoh Ghogomu, and Venture Best partner, Aaron Barker. Today, we are excited to welcome Mbiyimoh Ghogomu and Chip Davis to the spotlight. Mbiyimoh is the founder of Tradeblock, the #1 sneaker trading platform with functionality for sneaker enthusiasts to use their kicks as currency. And Chip is the founder of Tex Labs, a venture capital fund based in Houston, Texas, that focuses on angel and pre-seed stage investment in first-time underrepresented founders. Thank you for joining us today, Chip and Mbiyimoh.
Pleasure to be here.
Thanks for having us.
All right, to start off, let's begin with a question for Mbiyimoh. If you could tell us a little bit about the origin story of Tradeblock, what was the opportunity that you and your co-founders sought to take advantage of, and how did you arrive at the current conception of the platform? That's a big question, but however you want to handle it.
Okay. Well, I guess, the true beginning of the Tradeblock origin story is 7th grade, which is when I met one of my two co-founders, Darren Smith. So myself, Darren, and our third co-founder, Tony Malvo, we all basically grew up together. I went to middle school with Darren. I went to high school with Tony. And, we all grew up playing sports. Darren and I played basketball together. I ran track with Tony. And the other thing that we had in common was working, highly lucrative jobs at sneaker stores in the mall. Hopefully you guys caught my sarcasm there. I think they paid us maybe a quarter over minimum wage. But I worked at Finish Line. Tony and Darren worked at Foot Locker, and this was like late 2000s, early 20s. So at the time, sneakers were starting to become popular, but they weren't nearly what they are today. And I would say it was really the late 2000s when you started to see some of these, just pretty insane sneaker drops where people were, lining up a day ahead of time, to get a highly anticipated release. And so obviously working at sneaker stores in the mall, we started to see that ourselves. And the other thing that we started to see was, you would have folks who would come in a couple days before the release, and a lot of times they would know, one of our assistant managers or something, and they would, not so subtly, slip $100 bill across the table and be like, hey, when those Jordan 11s drop on Saturday, I need you to hold 2 pairs, a size 9 and a size 9.5 for me. For some context, back then, I think retail for those shoes was maybe $140, $150. So, being a curious person, naturally, I was like, the numbers seem to not make sense here. You're paying a 60, 70% premium just to get the shoes held for you. So eventually I asked one of these guys, and he was like, yeah, it's totally worth it because I'm turning around and I'm flipping those shoes for, double the price tag, if not more, in the secondary market. That was an interesting thing to us, but also, at the time it was just sort of like, okay, that's weird, but at least I understand what you're doing. And then I got to give the credit to Tony. So Tony was still is a huge fantasy sports guy. So he was constantly, building NBA rosters, NFL rosters, and a huge part of the fantasy sports experience is trading, right? Hey, how can I turn maybe some of my bench players into a star player? How can I find value in a player that maybe other people are undervaluing, et cetera? And one day he just kind of was like, man, what would be really cool is if somebody took kind of like that base concept of fantasy sports and applied it to the sneaker world where people would be able to actually trade sneakers directly with one another. As athletes, it was not uncommon that you would trade shoes with your teammates or with your friends, but obviously that was limited by a couple of things. The first being trust, right? It's one thing to trade with somebody and somebody you can meet with in person. It's another thing to find somebody on the other side of the country who has a shoe that you want and, be willing to take the risk of putting your valuable shoes in the mail, not knowing if you're ever going to get anything back from that other person. Maybe they're going to send you a sack of potatoes. Maybe they're just going to ghost you entirely. At the time, again, we were 16, 17, 18 years old. I would be lying if I said we took the idea seriously at all. I think it was sort of like man, that would be really cool. all right, it's Friday. Where is the party tonight? And, are you guys going up to the gym to play at the gym tomorrow? But then, fast forward 10 years to 2019, all of us had gone to school, graduated, got degrees, kind of gone into the professional world. I had been at IBM for 4 years. Aaron had been at Deloitte. Tony had moved up into management at Foot Locker and AT&T. And I think we all had, kind of good, comfortable jobs, but we were restless. And I think we all kind of had that feeling of, man, I want something that's more fulfilling, more challenging. And I think we were all also sort of itching for more ownership. I think when you start to realize that a lot of the people who drive a lot of the value for a lot of these companies are, not compensated in accordance with the value they create unless they have actual ownership in those companies, I think you quickly start to think about, okay, well, how do I create that for myself? And, how can I find an opportunity to build something, create something that's never existed? And, God willing, as they say, maybe build some generational wealth, for myself, my children, my children's children. And so we saw StockX and GOAT, kind of the biggest sneaker resale platforms, go from, nothing to billion-dollar valuations in 3 or 4 years. And we kind of sort of said, okay, the secondary market is very, very clearly established, but nobody is doing the thing that we talked about a decade ago. And it was as simple as we owe it to ourselves to try. So we started going to sneaker conventions, kind of building an email contact list and telling people about this crazy idea we had. Hey, we're thinking about building a platform that would let you trade your sneakers. What do you think? And it resonated. People were like, that sounds dope. I would definitely, try it at the very least. But I think, one of the crucial insights we had very early on was we realized that these marketplaces that were, kind of dominating the space, all of their supply was coming from resellers, people who resell shoes either as a full-time gig or, as a sort of significant source of secondary income. But for every one reseller, there were, 20 or 25 collectors who had 50, 75, 100 plus shoes who were only wearing, maybe 5 to 10 pairs, and 90% of the shoes in their collection had never been worn, were brand new in box, kind of just sitting on display, but who for whatever reason weren't interested in reselling them. Maybe they had a decent job and they were like, hey, I don't need the income. Reselling is a difficult business. It takes a lot of work, interaction. You're constantly talking to people, shipping things, etc. So if you don't need the income, you're kind of like, I would rather have these shoes. But the second we said, hey, by listing these shoes on Tradeblock, you open yourself up to sort of endless opportunities and possibilities as far as other people sending you trades that might be compelling, specifically opportunities to turn those shoes that are sitting dormant into your closet into shoes that you really want and want today. And you can do that, spending $40 or $50 out of pocket versus paying the $500, $600, $700, price tag you'd often see in the secondary market. People were like, yeah, that sounds super compelling. So, again, I think the big thing that we leaned into early on was, okay, the way to make this work is to focus on unlocking that dormant inventory that's sitting in the closet of all of these collectors. And frankly, it's a much bigger pool than the inventory that's held by resellers. So, we leaned into that, and it was the right bet to make.
Yeah, that's super interesting. Kind of democratizing the asset value of the sneakers for the purposes of collection and collectors maintaining and building, their ideal sneaker closet, I guess.
I was just going to say what strikes me is that it's interesting how it seems like there's more emphasis on the collector in the kind of business model, and you could use Tradeblock just as a way to showcase your collection and meet other collectors. And even if you weren't necessarily signing up specifically to trade shoes, that may come later, but it would just be a cool way to, meet like-minded people and show what you got. Like you mentioned, a lot of collections are in closets and things, and, you don't get a chance to kind of share it as much, perhaps.
Yeah, 1,000%. I think, that was one of our other kind of key insights. The way I put it is, buying and selling sneakers is, let's call it 1% of being a sneakerhead or sneaker collector, right? You are in the game, if you will, because you love sneakers, right? You love the stories, you love the designs. Very quickly you start to love the people. And, when you build connections with other people who share this passion that, frankly, people kind of outside of the circle think you're crazy. Really, there's no stronger bond than you can have when you're like, oh, look, another psycho. Let's talk about how we became psycho, and let's talk about the hundreds of shoes we have in our closet or in this storage facility somewhere, et cetera. So yeah, that's what we said, is sort of like, it's a little bit crazy that the companies that are dominating this space, the only thing that they are serving is sort of that transactional piece of being a collector. And, what do you do once you acquire that shoe? You want to show it off, you want to curate your collection, you want to, talk to other people about it and see what they have, et cetera. That was kind of a secondary thing, but I think it was also a really key part of what differentiated us. To your point, on a platform like StockX and GOAT, everybody is faceless. Like, there is no concept of a public-facing user. So you may have the most killer collection of all time. You may be a reseller who resells 10,000 shoes a month. And for all intents and purposes, you are just kind of another number behind the black box. And I think, collectors, and particularly sneakerheads, the honest truth is, like, you're exhibitionists. You collect these things and you want to show them off. You want to talk about them. And again, you want to get sort of that validation and recognition for all of the hard work that you've put in curating this unique collection. And so I think that was also another huge thing for people. And, some of my favorite stories about Tradeblock are not necessarily about the trades, but they're about the connections and relationships that people build, right? There was a guy who DM'd me and he was like, hey, I'm in my mid 50s. I was like an OG sneakerhead way back in the day, but, then life hit me and, I kind of had to step away from it and focus on other things. And, told me about how he kind of had a strange relationship with his son that he was recently rebuilding. And then particularly his grandson, who was, I think, 10 or 11 at the time, who loved sneakers. And he was like, I just have to thank you because my son told me about this crazy Tradeblock thing. And, I kind of started getting back into sneakers. I started using it. And it's just been, a huge part of, reconnecting with my son and my grandson. There's another story of, two guys who had kids, I think like 6 or 7 months apart, and started talking about fatherhood and the challenges. And one guy was, kind of mentoring and being therapist for the other guy, like, hey, first 6 months postpartum is really difficult. Here's, how to be supportive of your wife. Sent him a lot of their, like cute little baby Jordans and stuff that his son had grown out of. So again, one, we saw an opportunity to kind of disrupt the way that the market was transacting. But two, we realized that, the target audience, the target customer here was not in this for the transaction at the end of the day. They were in it because they were passionate about a thing. And so I think giving them a medium to really lean into that passion and connect with other people who shared it was a key part of what helped us build traction early on.
Well, once you had that idea and you wanted to really start rolling and building, you probably needed some funding for the company, as one does. How did you originally finance the business?
I begged everybody that I knew for money. I mean, I think that's kind of the reality for founders. I mean, at the end of the day, you're selling people on an idea and on a vision. Oftentimes when you have, a few signs that you might be right, but definitely not definitive proof of it. So, our first round, if you will, we raised, or we collected is probably the better way to say it, about $100,000. A lot of that was friends and family. I think ultimately about 35 or 40,000 of that was personal loans that I made to the business with significant anxiety in my gut when I did that. I didn't tell my African father about that. He was already, I think his blood pressure was already high enough about the fact that I quit my great job at IBM in the middle of the pandemic to go chase God knows what as far as he saw it. But, I would say we were also, incredibly fortunate in that, I'd say particularly in my time at IBM. So I worked for a guy named Bill Gilbert, and, he had kind of been tapped by the CEO of IBM in the early 20s to sort of breathe new life into the design program at IBM, and really modernize how the company practiced product design. So my first job out of college was sort of in the, you can kind of think of it as the central hub, the center of excellence for that new design program and that new initiative. I was hired as a content intern. They were like, hey, we have the curriculum. Now we need to tell stories to inspire people and to demonstrate that, building products in this way actually produces great outcomes. So I was like, sounds great. I was going to be a journalist, but you pay twice as much as I would get working for any of these journalism outlets. I'll do this for a little while and then, we'll see where it takes me. And I think I just personally then fell in love with product and design. And I think what I realized was how much of the process is studying human nature and human behavior, which is basically the most fun and fascinating thing for me in the world. And about 2 or 3 years in, I took a role working, it's called designer in residence. So it's sort of one part executive assistant, but you are a lot more sort of intimately involved in the actual business dealings of the executive you're working for. So I was basically Phil's shadow. I sat in every meeting with him. I helped take notes. We would have conversations after the fact. Hey, what did you hear? Help him with follow-ups. When he was asked to go speak, at NATO or at, some Swiss bank, I was kind of the ghost writer, putting together a narrative, helping him build out his deck. So me and Phil, built a really close bond during that time. And it was towards the end of that kind of 1-year assignment that Darren came to Austin and sort of ambushed me. It's like, hey, I'm going to be in Austin. Let's grab lunch and catch up. I was like, awesome. We haven't talked in a while. That would be great. And as we're eating lunch, he was like, hey, so real reason I'm here. We think we want to start this sneaker trading company. Tony and myself have already been talking about it. We feel like we know the market and can be integral in kind of building that first seed of, users and customers. But what we don't know is kind of product and technology. So they actually wanted me to be their CTO. And I think the first valuable thing I said to them was, you do not want me to be your CTO. I am not an engineer, but I know enough about technology to hopefully find the person who can play that role. And so I just naturally started talking to Phil about this as we were having conversations. And I think he just, as a serial entrepreneur himself, just really quickly was like, man, this sounds like a really interesting opportunity and a ton of fun. And even though that, the executive assistant role was sort of designed to set you up for leadership within IBM, to Phil's credit, he was like, hey, IBM will always be here. You only get so many opportunities to go build something for yourself. And it seems like you guys might have stumbled upon something here. So Phil was really integral in, giving me the push and the confidence to make that leap of faith. And, Phil was also someone who was willing to put his money where his mouth was. So I remember, we went to a little coffee shop maybe a few months in, and I presented the first version of our pitch deck to him for feedback, because he's a great storyteller, really good at sort of being incisive about, hey, these are the things you want to drive. So we got through it. He gave me a little bit of feedback, and then he said, do you guys have a business bank account set up yet? And I was like, no, we're still working on kind of, the narrative and things like that. He was like, go set up a business bank account, and I'm going to be your first check. So you have your first $10,000. And then probably later that day and maybe the next day, we called Chip, who, was kind of his longtime business partner. They'd been involved in a number of deals before. Chip can tell you about that conversation, but all I know is Phil then called me back and said, hey, I have your second investor. He's in for 10K. He's going to talk to you and act like he's not in. So give him a legitimate pitch. And then I think Phil then realized I know nothing about this Chip Davis person. So he was like, wait.
I found it. I've still got my wallet.
He's like, let me backtrack. Here's Phil's backstory, or here's Chip's backstory. He's a great guy. We've been involved in a number of businesses together. And, I think he can be really helpful in, helping this business go somewhere if indeed, this core idea you guys have has legs. So, I think Chip, we met maybe that next week in Houston. Chip brought his daughter, who was a senior in high school at the time.
A junior, yeah. So, yeah.
And who was
but a sneakerhead.
Resident sneakerhead.
That was my question: is whether she was, whether she was a sneakerhead.
Yeah. So he said, pitch me and my daughter, and if you can convince my daughter, then I'm probably in, because she knows way more about this space than I ever could. And I'll give my shout out to Miss Laurel Davis, who is an incredible person in her own right. She asked good, incisive questions, and apparently, after we left the meeting, she told her dad, "Dad, you should definitely invest in this." So that's kind of how we got started.
That's great to get all that backstory. And I didn't realize the Phil Gilbert connection. Listeners may not be aware. I'm familiar with Phil, but listeners may not be aware that he's kind of, like you mentioned, a longtime partner, Chip, and I think they work on a number of things together. So it was great, really interesting to hear from the founder's perspective how it all came together and through Phil and all that good stuff. Would love to hear from Chip kind of how he, like you mentioned, longtime business partner Phil Gilbert, who was working at IBM, started talking to him about this opportunity. Would love to hear, Chip, just kind of how that all developed from your perspective.
Yeah, sure. So, Phil and I had worked together on a number of projects. Our link was continuous and pretty strong ever since, I started backing him. Phil's brilliant, and, it's one of those things where he calls, he listens. His brilliance is not only in his insight, but it's his drivenness around execution, and he's very specific. So I had a super high level of respect for Phil. And he said, I've got this guy, and I think he's A+, and I want you to hear this deal. So, that's how this started, and that's not an unusual story. It's, as the expression goes, it's not what, it's who you know, right? And so I knew Phil, and Mbiyimoh knew Phil, and that was the initial link. And so, yeah, I did have a meeting with Laurel. I'm not a sneakerhead. I didn't know what I was getting into. I'm predominantly an enterprise software investor. That's things like SAP. That's how I backed Phil. That's how he got acquired by IBM. And when I was much younger, because I didn't know what to grasp on, I would focus on the code base and the fundamental problem more than I did the people. And as I've gotten older, I realize somebody told me once, and I know this is something I got in your notes, was somebody told me once, a lot of money's been made off of adequate technology. And what the guy was trying to tell me is it ain't the code. It's the people. And, that's pretty abstract. And there are very specific elements to it. It's the people equation. But as I've gotten older, develop models around indexing off of people. A lot of times when you're looking at a deal, everyone, after the prospect leaves the room, everyone sort of looks around and says, I like him. And it's very abstract in how the market approaches that. It's not data driven, if you will. I was indexing off of Darren, Tony, and Mbiyimoh. And it was not just them individually, it was the interaction. And, the thing I was looking for predominantly was, okay, this is very early stage. Are these hypothesis-driven people? And how quickly are they willing to amend their hypothesis? And are they outwardly focused as opposed to engineering-driven, if that makes sense to you? Where a lot of companies get trapped is their belief that their product is the product. It's not. They think that their experiences make them the customer. They help, but they don't. And the impression formed about these people. First with Mbiyimoh, I thought in the first 5 minutes, I'm going to invest in this deal based on my indexing model. And now I'm going to continue for the rest of the meeting sort of challenging my own model, my data points and the strengths against it. And I also was indexing off the relationships between the people. Each was different. And I was like, okay, if he likes him, then I like him. If he likes him, then I like him. Sort of the triangular relationship between the founders. They were different personalities. That it wasn't BS and that the interactions were genuine. And I thought this was a team that was going to be willing to work together, which is important when you're spinning different hypotheses and you're indexing off of a universe of customers that are coming at you full speed. So I don't know if that answers your question, but that's kind of how I got to yes and my perspective in getting there.
Yeah, the evolution in your own thinking from kind of early days of being very focused on the technical aspects of the product, and then as you kind of had more cycles and been through with a few different teams, understanding the importance of the team, I think that's huge. And I talk with clients. I look at decks too, mostly in the context of clients just want to bounce it off me before they send it to an investor. And that's often a feedback I have is like, it'd be great to have more to say about your team. A lot of decks are skimpy on that point, or they move it to the very back. It's like the kind of last slide, when the presentation finishes. I think that that's a really important insight. But I have to ask, you mentioned that you were not a sneakerhead at the time. Have you become a sneakerhead through working with Mbiyimoh and these guys?
No.
What's the best pair of sneakers?
Does anybody on this call know who Stan Smith is?
Yes.
Absolutely.
Yes.
Okay. He wrote a famous book called I Am Not a Sneaker. And I'm still kicking it with my Stan Smiths. I like them. They do it for me.
Mbiyimoh or Stan Smith's approved sneakerhead wear?
No way.
So actually, I would say that Stan Smith's definitely approved. There's also sort of just like a, sneaker culture goes through cycles, and right now it's very much in sort of a, classics, simple, quote unquote dad shoes are like very, very popular right now. So Stan Smiths are definitely sneaker culture approved. And the other thing I'd say is, like, to me, sneaker culture is like what you like. Certainly there's going to be a bunch of models that are hyped and it's like, this is what's cool because everybody else thinks it's cool. But, I think when you talk to the true sneakerheads, the OGs, if you will, they'll tell you, like, who cares what everybody else thinks of the shoe you like. And in fact, the best thing for a sneakerhead is, I love this shoe and everybody else hates it. So that means I can get it really cheap and I can get as many pairs as I want. So, that's actually the best place to be as a sneakerhead.
Oh, go ahead, Chip. I'm sorry.
I was going to say, I want to tell 2 minutes of our post-wedding ceremony relationship with Mbiyimoh, if I might. It's a little bit about the genesis of 10X, but it relates back to Mbiyimoh. Mbiyimoh's smiling as if I'm setting him up for some kind of fall. That's not what's going on. So, it took about 5 minutes for me to figure out that I wanted to make this investment, and we made the investment. And after a while, I started to wonder, what am I doing in this deal? I'm a middle-aged white guy in Houston, Texas, and this is sort of a B2C, and it's sneakers, and I just didn't understand it. And so I spent maybe a year just sort of probing around with Mbiyimoh, asking him, about everything I could get my hands on, not just background, not just geographies, thought process, etc. And, the way 10X came about was Mbiyimoh said, after a while, getting to a conclusion that I wasn't totally full of crap, he said, there are a lot of people who look like me who can play at my level, and they don't know how to get to the batter's box. And I'm like, okay, let's go. And so that was sort of the genesis of X. And, I liken it to, it's not an austerity program, okay, what we do. Emily read sort of our header, what we got in. There's this talent out there, and it historically has not been connected to my world. And at first, I was a little dismayed because I found, like, through my interrogatories with Mbiyimoh, I was entering another universe. It was a little bit of dismay. It was a little bit of disappointment, right? Because there was this alternate perspective on things that I just hadn't experienced before. But, the analogy I like to use is something akin to baseball, which is I'm an Astros fan. Excuse me. Part of what makes the Astros successful is early on their farm system discovered all this talent in pitching that nobody else had really seen before. And my connection through Mbiyimoh into that world has me believing there's a lot of talent out there that people just can't see because it's not driving by their front door. And so this is not about DEI or austerity. It's all about the money. And if we're honest with each other, that's what people care most about. They'll listen because of the DEI contemplation, but their decision is based on the money.
Yeah, so that's interesting. We've talked a little bit. Emily kind of gave a little background on 10X Labs. I think it'd be great to kind of hear more. But would you say that your experience with Mbiyimoh and Tradeblock, that was part of the genesis of 10X Labs? It sounds.
Yeah, I'm sorry. That was the connection I was trying to make. Yes.
Yeah.
Yeah, it was really through those conversations and that something close to an epiphany, those experiences that said, okay, you know what? There's a business here. There are guys who can throw a 12-6 curveball with a high spin rate, and we're plugging into them.
That's great. So I guess Mbiyimoh, when Chip, I'm just curious, sort of the extent to which you guys discuss the possibility and the thesis of 10x Labs, and I'd love to hear Mbiyimoh kind of how those conversations went from your perspective and how you feel
Yeah.
about the way it's developed.
Yeah, I think it was relatively organic. You know, I always give Chip a lot of credit. I don't know how often I say these things to him, but when I talk to other people about Chip, one of the things that I say is the first few interactions with Chip can be jarring if you're not used to interacting with people like that. Because I think Chip's superpower is he very, very rapidly builds models and algorithms, if you will, in his head to understand a problem or an opportunity with a lot more structure than the average person does. And I think it's actually incredibly helpful as a founder, as someone trying to build something, to have those conversations, because oftentimes it leads to more clarity of a thought or an idea that was somewhat intangible before. But again, the first couple conversations, it's just like, I feel like I'm being interrogated, kind of like,
I'm sorry. I'm sorry,
what,
Bim.
but one of the things, again, I'll give Chip a lot of credit for. Most founders will tell you, like, the worst thing that can happen is one of your investors just randomly calling you in the middle of the day. You have that moment of like, oh God, what did I mess up? What is this person going to talk about? And so I think the first, 2 or 3 times Chip called me, I was like, oh God, what did I mess up? What is Chip going to ask me about? But to his credit, it was always just really pure and authentic curiosity. And I would say it was rare, if ever, that Chip called me to express a strong point of view. It was, even when he had a point of view, it was always, hey, I have this thought. And my favorite Chip preamble, he says, I make up in my head. And then he says, here is the line of thinking. Am I crazy? Am I full of it or not? And sometimes he was incredibly on point. Sometimes I was like, I wouldn't say you're full of it, but you're far, far, far away from the target. But they were fantastic conversations. And I think the other thing, that started to happen was our conversations started to sort of expand beyond just business. I think one of my favorite books that I've recommended to a number of people, I guess it's maybe less book and more compilation, it's called Out of Your Mind. And it's a collection of lectures from Alan Watts, who is, a philosopher basically. And it's like the deepest, headiest philosophy, just contemplating like what even is existence, etc. And I remember Chip telling me about this and then, going and starting to listen to it. And I was like, this is so far removed from what I would have assumed this person was interested in. So, it was just a really cool moment for me. We've had, probably a handful of conversations about Alan Watts and his philosophy since then. But I think those sorts of conversations naturally led to, for us building trust and me being, willing to be pretty frank and open and direct with Chip about things like, hey, we are frankly incredibly privileged as Black founders because I happen to have somebody who is plugged into traditional startup and venture networks with Phil. Most founders of color do not have that. So not only did we have the connection and somebody who could help us understand the mental model, which I think is a huge part of it. There are people with incredible talent, but who don't understand the specific structure that, the folks in venture capital allocators, have when they approach deals. And then I think the other thing that we had was, advocates, right? When Phil went to Chip, 90% of Chip's decision was probably made already because Phil said, this is somebody who I think you should invest in. And I think, frankly, that's how most business gets done. You build relationships with people you trust, both as far as kind of I trust this person's character, but also I trust this person's judgment and their evaluation and analysis of things. And people just pitch each other deals. And it's like, you're in on this? All right, I'll listen to it and I'll do my own evaluation. But if you're bullish and you're somebody who, has a track record of being mostly right or right often enough to make me some money, I'm in. And so I think I kind of talked to Chip about that of like, hey, most founders of color don't have that. And I also talked to him about what they do have, which I think are the most critical skills for building a business, which is like resilience. They've, been through a lot of shit and a lot of hardships that a lot of people, haven't been through. And they oftentimes have been forced to do more with less. I think one of the other things that I always talk about is, as a person of color, I think very few people are malicious. So let's start there. And I think oftentimes these sort of conversations are framed through, people have these, deep-rooted kind of conscious biases. And I just don't think that's true. I just think that human beings pattern matching creatures. That's what we do. And, when 98% of the engineers you see are, middle-aged white guys who go to some, half a dozen different schools, your mental model learns, okay, this is what this role looks like. And so I think that's the biggest thing, being a person of color or being a woman, God forbid being both, that's a huge challenge because you go into those rooms and people, again, malicious intent, don't see the normal pattern that they're used to seeing. And so, that's kind of what I talked to Chip about and said, hey, if we can help these folks understand the mental model on the other side and sort of, craft what they're doing through that lens, I think this is a massive opportunity because, again, I've seen it time and time again. When I was at IBM, I had a little side hustle, if you will, internally where I was like, hey, I want to diversify our hiring pipeline. We were basically hiring from the same 2 or 3, well-established design institutions, RISD, SCAD, et cetera. And those institutions, aren't super diverse. And so I said, hey, we got to look beyond that. And we have to think about how we evaluate this talent in a little more, kind of broad and holistic way. And I think the biggest thing that I said to everybody who, gave me the time of day to listen to the program was, look, I have seen, the Hispanic designer, the Black designer, the, woman of color who worked another career for 5 or 10 years, discover this opportunity, go through a 6-month boot camp, come out and be, let's call it like a B- designer. Probably not as good as the kid whose, parents are designers, older brothers are designers, again, went through RISD, graduated, and is very solid kind of right out of the gate. The difference between those two people? One of them is 10 times hungrier than the other one because one of them has always taken it for granted that this opportunity existed. The other one is like, oh my God, I can make this much money, doing something that is ultimately like creative and, allows me to flex all these different parts of my brain. So within 2 or 3 months, what you find is that person who is hungry quickly surpasses that person who is complacent because they are much more willing to put in the work. They're way more curious. And so they pick up all sorts of different skills and knowledge kind of outside of their core competency. And they ultimately become way more valuable, to their teams, to the company. And so I think that was the other thing I, tried to communicate to Chip and I'd like to believe was sort of part of the core thesis of, hey, there's a, to Chip's point, there's a business opportunity here. This is alpha, as they say. This is something that other people aren't seeing that has a lot of potential. So let's lean into it.
Yeah, and to that end, with respect to the 10X Labs investment philosophy and, the strategic manner in which you, Chip, and your partners engage with founders to help them grow, but also obviously at the end of the day, optimize the value of your investment. Is that something you want to kind of dig into? I know KPIs and milestones are part of it, but I'm sure there's a lot more that, comes top of mind to you.
Yeah. So without being too elaborate, I want to give the credit to Phil. Phil's the mastermind behind how we do what we do. And, what I've parenthetically defined as quote unquote startup skills. And, without invoking too many cliches, what that's really about is about intentionality, and what intentionality is about, is specificity. what happens is a lot of people, myself included in my own career, you start down a path and you just get lost. And you get lost because you haven't decided or defined exactly what the center of your target is, exactly what you're trying to prove. And even though you may have done that, let's say, then your willingness to stick to it or test it against real objective data, that may not be, your conviction may not be so strong. So people step off the path. And, what I think Phil does so brilliantly is forces us to stay on the path. Does that make sense?
Yeah, definitely. And I guess to that end, use the same preamble.
Right.
What's the next milestone that Tradeblock is approaching in, staying on the path?
Yeah. So I'd say the next milestone, or the chapter that we just started, was adding buy and sell capabilities to our platform. So for our first 3 years, we were exclusively barter-based trades only. We said, hey, this is the gap in the market. To Chip's point about Phil, sure, we can probably go and do buy sell in addition, but let's focus all of our energy on the gap. The way to win is to be intentionally different and to lean into that. So, we were able to achieve a good amount of success doing that for 3 years. But, over the past 6 to 12 months, we started kind of just doing another evaluation and saying, okay, what have we built? What's the state of our company? What's also the state of the market? And, where is the opportunity now? The secondary sneaker market was on fire when we first launched this company. COVID basically turned everybody into a collector because we were all restlessly sitting at home. And it drove insane growth in that secondary market. When the world opened back up, a lot of those folks kind of, moved on to other things. Nike also has a role in this. Nike started really overproducing a lot of shoes and kind of going away from the kind of intentional scarcity strategy that had helped drive that secondary market. So there was a few things that happened that, led to resale prices going down, led to some contraction of that market. And so we sort of said, okay, the world that we're in is different than the world that we started in. What is the crucial insight, the thing that nobody else is seeing, that we now should be acting on? And I think that came down to a realization that these marketplaces and kind of the secondary market more broadly, like the lifeblood, the core nucleus of it is enthusiasts and resellers. Really, no reseller is not an enthusiast themselves. It's 5 to 10% of the people who engage with sneakers, but they drive easily a quarter of kind of all of the revenue, transactions, etc. in the market. But the big platforms are basically built for casual buyers. Kind of thesis or strategy was, hey, we'll maybe start with those enthusiasts for our first 6 months to a year, but our goal is really to expand beyond that and kind of snap up all the transactions from the person who's like, I know Jordans are cool, I know Dunks are cool, but I can't tell you what all the releases are. I can't talk to you about the collaborators or the designers, etc. And no knock to them, like that was a smart business model. That gap had not been filled at the time. But when you focus on the more casual buyer, you make a lot of decisions that ultimately run counter to what those kind of hardcore enthusiasts want to see. And I think that was what we realized. And we said, hey, if we focus on the area that, these companies are weak or the area that they are neglecting, we can go and peel away those 5 to 10%, the enthusiasts, the hardcore, who are at the end of the day, the most valuable customers in the space, and who frankly drive a lot of the other 80, 90% of, the audience that's in the space. So to do that effectively, we said, well, these folks buy and sell in addition to trading. We can't do this unless we have a platform that unifies buying, selling, and trading all in one place. So that's the focus right now. But kind of more broadly, the goal is to build a platform that is sort of purpose-built for those folks and that does things like, encourages and facilitates communication and relationship building. Again, if you're trying to serve a casual buyer, you look at a conversation with the seller as a distraction. Like, I don't want you talking to that person. That's just an opportunity for you to second guess this purchase. And there's, a handful of things like that the existing marketplaces have made intentional decisions around that have ultimately led to that, core nucleus, the lifeblood of the secondary market, sort of being like, I very begrudgingly tolerate using this platform because I just don't really think that there are any other viable alternatives.
Right. So if I think of that, I'm just going to put my investor hat on for 1 second, Emily, and respond to that question. So from zero to making money with regard from the investment perspective, product market, that's the first thing that happened at the company. Then you demonstrate, can you scale product market fit? Market was cooking. We had no doubts. Then the third thing is, can I scale product market fit economically? Am I producing gross margin, fundamental profitability? And then the last thing is, can I drop it to the bottom line? So before the market contracted, we were well on our way to that fourth dimension, and everyone's walking around picking out, the carpet for their new jet, right? That's kind of where we were. And then the secondary market contracted a little bit, and we're like, oh my God, wobbly on product market fit. And, the advantage of having collectors on the system, Aaron, as you alluded to previously, is all this inventory is exposed that otherwise wouldn't be conspicuous to the world. And from a retail perspective, I come from the securities business. From the retail perspective, I learned from this really smart guy, stocks are sold. They're not bought, right? And so the advantage of the Tradeblock collector closet is all these retail quote unquote investors are exposing to the world all the stocks they're holding in their account, which enables us to pick up the phone and go, hey, let's change this stock for that stock, which they otherwise aren't going to do unless they're prompted. And so with the advent of buy sell in our trading desk, we're now starting to climb back up. Here's the scale. Now, is everyone picking out carpets, for their jet today? No, but that's kind of where we are. And Mbiyimoh, that's just from an investor perspective.
No, well said.
Well, yeah, it's interesting. Something I've been thinking of just hearing both of you talk about this journey is the importance of sticking to the path and measuring kind of where you're at against objective data. But one thing you hear all the time in the world of founders and early stage companies is the need to pivot. When things don't go according to plan, you iterate, you pivot. That people talk about that sort of thing a lot. But it's interesting also to talk about the need to kind of stick to the fundamental goal and not get off track. And so I think the change in the secondary market for sneakers is an interesting post-COVID, after maybe the activity quieted down a bit. It's an interesting opportunity to discuss, how you balance sort of iterating and pivoting as you need to with also staying true to the path that you've kind of outlined.
The fundamental thesis wasn't wrong. It just required augmentation. So the pivot wasn't the pivot in the sense of Ventureland of we're going to change what our fundamental product is. We just needed to expand the portfolio.
Just adjust the hypothesis, right?
Add to it, augment it, as opposed to change it.
Mm-hmm. Yeah.
Yeah, 1,000%.
Wholesale.
I think, that's probably one of the biggest challenges for founders is the balance between sticking to a core thesis that you feel strongly about versus, being responsive to kind of a changing landscape and changing variables. So I don't think there's a right answer to that other than, being constantly evaluative and critical of both of those things and asking yourself, is that core thesis still true? If yes, you got to have, the courage to stick to it, even when everybody is like, oh my God, the sky is falling. And I think the other thing for us is markets are cyclical. The secondary market for sneakers is no different. It went through a moment like this in the mid 2010s. And so, my perspective is either you believe that the secondary market for sneakers is dead and is never coming back, in which case it's like, well, you're just wrong. That's not how these things work.
Right.
Or you believe that right now, it's in kind of a bear market, and it'll return to a bull market like it has in past cycles. And so my thing is, I don't know, there's probably 10 people who have gotten credit for this quote, but, buy when there's blood in the streets, even if the blood is your own. Like, that's the thing that I keep going back to is, hey, right now everybody is playing defense because of the state of the market, and they're not innovating. They're not trying to figure out how do we create more value and how do we serve our best customers. And so, the fundamental, with my investors is, hey, if we believe in the core thesis, we're actually not changing it. To Chip's point, we're adding to it. what we're really doing is giving people a way to acquire sneakers and to operate in the market. Adding buy sell is just another way to do that. And we're approaching it very differently than everybody else because, again, our goal is not how do we maximize our gross margin on every transaction. Our goal is how do we build a platform that becomes basically the de facto platform for these serious enthusiasts and resellers. And I think it gives us the license to move very differently than everybody else. And, we're only a week in, but we're already seeing that very much resonate with that target audience.
Awesome. Well,
And did you have something to add, Chip?
sorry.
Oh, I was going to say, I think our perspective has changed, which caused the augmentation, which was barter through collectors' closets and a social strata and comms layer. That was more passive, and now we're active. As I said earlier, we're not waiting for the market to come back in its passive state. We've changed from the perspective of people buy stocks to no, people are sold stocks. So we're hitting the accounts. We are a trading operation. We are a buy-sell operation. And so there's this shift from, I hope it comes back, we can manufacture through a market-making effort, an aspect of the market that is significant. Does that make sense?
Absolutely, yeah. And I love the analogy with trading other like stocks or securities. I think that's a brilliant analogy. I mean, it's at the end of the day, these are all just different assets, right? Which also is something it could be a whole nother conversation. But obviously, once you have a platform for collectors to trade and buy and sell, there's a lot of things that could potentially be trade and bought and sold. But that's probably a whole nother discussion. I know we're running low on time. I think Emily, probably my guess would be we need to wrap it up soon. I have to ask, though, the question about the best sneaker in your collection. And so, Chip, we heard the Stan Smith apparently is yours. But, everything comes back around. The dad shoes are cool. So if you just
Thank you for that lifeline, Aaron. Thank you.
You just stick with what you love. Eventually, the world will come to you. But Mbiyimoh, we got to hear your answer to that question. What are you most excited about in your collection, or what are you eyeing right now that you want to add to your collection?
Oh man. I'm most excited about in my collection. I'll flag two shoes. So the shoes that I've worn by far most often, and that have kind of shared in some of the most meaningful moments of my life over the past 4 or 5 years, are the Ama Maniere Jordan 3. Ama Maniere is a boutique that was founded by a black guy. Grew up in the hood, around gangbangers and all of that, and basically was like, I want to do something different. And he ended up, starting 4 different boutiques for kind of, streetwear, and then ultimately, had an opportunity to collaborate with Jordan on a number of sneakers. And so, those Ama Maniere 3s, they're just a beautiful, clean, tans, creams. My color palette is basically black, white, gray, or cream. And so I can wear them with 90% of my outfits. Super comfortable. They were there at my wedding. They were there at my bachelor party. They were there at my honeymoon. So there's also just a lot of meaning and memories that are tied to that shoe. But I'd say probably if I had to pick the best shoe in my collection, and probably also the best trade I've ever gotten on Tradeblock, was a pair of 1992 Jordan 1 Chicago's. So that's kind of like the classic white, red, and black Chicago Bulls colorway. 1992 was the first time that they retroed that shoe. So it first released in 85, and then 7 years later they put out the first retro. I was born in 91, so it was also like this shoe was 1 year younger than me. And the great thing was it had been worn often enough to be supple. So one thing with shoes is if you don't wear them at all and let them sit for a really long time, the leather and especially the rubber in the sole can get very brittle. And then if you try to wear them, after 10 or 15 years, oftentimes the sole will come right off or start cracking. So these are in fantastic condition, no major damage or anything like that, but had been worn often enough to where I can put them in my feet and go out and walk around and, not be worried at all that, they're going to fall apart. To Chip's point, that landed on my doorstep. I wasn't hunting for those. Somebody had a pair and, I think tried to sell them for a little while, and it was difficult because it's an expensive shoe. Even used, that shoe will probably get you a couple grand. And so he sent me an offer, and he asked for a lot. He asked for maybe $1,200-$1,300 worth of sneakers. But I was like, it's rare that you come across a piece like this in condition like this. So it's an easy decision for me.
I got one question for Emily and Mbiyimoh before we adjourned. Emily, I don't know if there's another question. I assume both of you have seen the movie Pulp Fiction.
Mm-hmm.
Emily, you haven't seen Pulp Fiction?
I have seen it on my Netflix queue. But I've not watched the film.
Oh my God.
Yeah, there's a generational little thing there.
Okay, well then I'm down to be. Emily, you're excused from this examination. So, in Pulp Fiction, are you familiar with the character the Wolf?
Uh-huh.
Can we just agree that for purposes of this call, that Aaron Barker closely resembles the Wolf?
Now I have to go back and look at Pulp Fiction again. It's been a long time for me.
It's the stash. It's the stash.
Yeah.
It's a different look. I like it. I'm trying to.
It won't be around forever. It's mostly just to annoy my wife for a little while, and then I'll get rid of it.
Emily,
like
in the movie,
different.
Emily, in the movie, when people get in trouble, they say out loud, "We got to call the wolf," and the wolf comes in and cleans up the problem.
I like that. Now there's a marketing angle.
That's a pretty accurate description of the role Aaron plays. So
I like it. Maybe I'll keep it after all.
All right.
Well, thank you, Mbiyimoh and Chip, for joining us today. This is a great conversation. And again, thank you for coming on. Thank you for listening to this episode of Venture Best Spotlight.
Please make sure to subscribe for our upcoming episodes featuring our network of amazing founders. And if you like this episode, please remember to rate and review on your favorite podcast platform.